Hey, my name's James Nicholson and welcome to my YouTube channel. There's bad news for mortgages. We've got the inflation data out tomorrow and everyone is predicting a huge increase in inflation and it's only going to get worse. Now, this data is going to have a big impact on your mortgages. So I'm going to talk about what we expect to happen to mortgages. What can you do to protect yourself as well? And we're going to talk about what this could mean for the UK economy. Is unemployment likely to rise? What would that mean for house prices? So we're going to talk about a lot of different stuff here. So if you're new around here and you haven't done it already, do subscribe to the channel over there and hit that bell notification. We've got new content every day. House prices, we talk inflation, we talk about interest rates, we talk about property investing and much, much more. And let's get some views on this video by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm and helps the channel grow. So thanks to everyone that does that. So, inflation data. We had some really good inflation data. So the current inflation, let's just be positive about what we're sitting on right now, is 1.7%. But that's going to jump tomorrow. And the expectations are it's going to go all the way back up to 2.2%. That's a big jump. Now, the Bank of England said at this time of the year, we would be at 2.7%. So it's definitely better than that, but it is significantly higher. And what's expected to be that real driver in pushing up inflation is energy costs. It's boring talking about this now, isn't it? We've been talking about energy costs for years. I did some research just now. Before I started recording this. We're now the most expensive electricity in the world, which is insane. And so something needs to happen. I don't personally, you could disagree and tell me if I'm wrong on this. I don't feel the government did anything, the Tories or Labour, to help with this energy crisis. And I feel like they're kind of blind going into this stuff because this is going to lead to more inflation. It's going to lead to more businesses going bankrupt. It's going to lead to higher unemployment. And these things aren't great, especially if you're in power as Labour are right now. So the energy costs, the government hasn't really, in my opinion, done anything to support people. In fact, they've taken away the winter allowance of pensioners, which I think is absolutely disgusting. I think we could have cut costs in other areas for sure, instead of taking those costs away from them. And if you look up British Gas's latest figures, the latest annual figures, which update again in February 2025, but the current ones, they went from 75 million profit to 750 million profit, 10 times more profit. There needs to be a windfall tax there. They're clearly profiteering and absolutely taking the mick out of us here. So the energy costs are going up and that's expected that we'll see that. So the energy has gone up by 9% this month, which is a massive jump and really going to hit people, especially when your costs are going up anyway with the winter. And what also is expected to go up tomorrow, and they've been talking about this over and over and over, and they're desperate to drive this down, is service inflation. Now, if you're a government and you want to bring down service inflation, it's not smart to increase costs massively on service businesses. So let's just say you own a beauty salon, or actually I'll talk about a fish and chip shop, because I know the guy over the road from my office here owns a fish and chip shop and his energy costs are astronomical. And he really struggled to survive last time the energy costs went up. So he's got a fish and chip shop. He's now got 9% more expense on running the energy. And that's his biggest bill apart from food costs, right? So it's one of his largest bills that he's got. He's got 9% up on that. Service businesses have got that energy cost there. They've also got wage increases now because they've got an increase in the minimum wage. So all of this is happening at the same time, right? They've also just had a big jump in the national insurance costs from 13% to 15%. That's another hit for them. And people don't have disposable income like they did. So it's harder for them to get customers. So all of this stuff is hitting these small businesses. They're going to recruit less people. They're going to get rid of people. And some of them are going to go bust. Now that isn't going to be smart for the economy. And the budget didn't really do anything to address any of this. In fact, it made the pain worse, didn't it? We've got a wage increase for that small business. We've got a national insurance increase for that small business. And we did nothing to help with energy costs. So there's a triple whammy there, or four things if you include the fact that disposable income is down. Now, how does this feed into property? Well, the property side of things is likely to start to slow down massively, and it already is. Some Rightmove data came out this week saying asking prices are dropped massively this week. I'll be doing a video on that in the next day or so as well, so look out for that one. And so that's going to lead into less people buying. We had a good influx in October. So September, October, because of rate cuts in the summer, there were 23% more property transactions. But we also said that there was a lot more listings, more properties were listed for sale than for years. And what we said on that, we've got to keep an eye on that data. So listings are high at the moment. Yes, it did have a lot of extra buyers in, but now those buyers are going to start evaporating. And so as you get into next year, as businesses start to tighten their belts and people start to hear about people losing their jobs, they're less likely to look for properties to purchase. So that, in my opinion, will start to make house prices go down. I'm not saying it's going to be a crash, but I do think the economy and house prices and lots of things potentially next year could be quite bad. And so let's see how that pans out. You still don't have enough houses, so you've got that as a benefit. But do they do anything? That's the key here. A lot of this stuff is dependent on, are Labour actually going to pivot and do something to revive the economy, or are they just going to let it go down the pan? Now, rate cuts in a recession are likely to happen. But rate cuts right now, when you need them, the chance of a rate cut in December has dropped massively. It is now down to just 20%. And it's similar in America. So rate cuts are unlikely to happen. The UK rate cuts are unlikely to happen due to the fact that we're looking to see how does this budget play out. You've got a lot of retailers in the news this week saying we will be increasing costs. So that means the next lot of inflation data is unlikely to be good. We're also likely to be cutting staff. So employment figures are unlikely to look good there. In America, the difficulty they've got now is they've got a lame duck presidency, meaning you've got Biden with, he knows he's on the way out, and you've got Trump coming in. And so they really need to get the new president in, get started, see what policies actually are implemented. Are the tariffs going to happen, as was said, because that could be inflationary in America. And that means that they won't necessarily put the rates down until they see what actually is going to happen. So yeah, what's my advice if you've got a mortgage that renews in the next 6 months? I've said this in lots of videos, but not everybody watches all my videos, or maybe you've just come across this channel. If you've got a mortgage that expires in the next 6 months, my advice would be to speak to a broker in the next week. Talk to a broker, get a deal started. A lot of lenders, you can start the deal this early. Get that process started, fix a rate. At least then you know your worst case scenario. If we go into a terrible recession, rates will be slashed. In that scenario, as long as you haven't started that new deal, then in that scenario, you can swap onto that better rate. So what I'm saying is you go to your mortgage company and you say, give me a deal. And they say, great, here's a deal. It's 4.5%, right? Now, if they drop their rate between now and when you start, you can swap onto that. So let's just say they drop rates to 2.5%. They won't, but let's just say they did. As long as you haven't started that deal, you can jump onto that 2.5% rate. But over the next few weeks and months, rates are likely to increase. Mortgage rates that you get will likely increase because of uncertainty and the likelihood of this inflation coming back. So they're likely going to go up short term. Now, if you fixed your rate, which I know a lot of you've done from watching this video, previous videos that we've talked about, you can fix at this 4.5%. Then next week, if the rate goes up to 5.5%, you've locked in at that lower rate and you know what you're going to be paying, and that's good news. So that's what you need to do, is just get yourself that certainty. Share this video. There's a share button down below. Let your friends and family know that have potentially got a mortgage coming up and they're worried about rates going up. It's not as bad as you think if you act quickly. Anyway, the inflation data is out tomorrow. Let's see. It's not looking good. It's likely to be high, and that isn't going to be great, and the markets won't react great, and you will not see many mortgage rate cuts, in my opinion, for this side of Christmas. Anyway, do like the video, not because you're happy with the content, but you just want to help me get some more views. Let me know in the comments what your thoughts and opinions are, and check out all the other content on my channel, including this video right here.